Hello and welcome to another session of the My Solo 401k Financial Daily Webinar Series. We're excited to get started. I see we've got a question already, which is fantastic. If there are other questions as we go through the content or even on other topics, please chat them over so that we can be sure to get to them all. We'll go through the questions, additional questions after we go through the slides. As always, the presentation is being provided for educational purposes only and should not be construed as tax, legal, or investment advice, nor is a solicitation. When making an investment decision, please consult with your tax attorney and financial professional. So again, welcome to your daily Solo 401k webinar and Q&A session with My Solo 401k Financial, where we help you to stop overpaying taxes and start building real retirement wealth. Today's topic: Altruist Advisors, keeping all solo 401k options open. Why the December 31st deadline is critical. So again, this is your chance to get answers. So we want to use the time to answer your questions. So please chat over questions on today's topic or anything else. Please chat them over now so that we can be sure to get to them all. Let's start out with the first question from Alfonso. For S Corporation owners, is the magic number 70,000 to maximize solo 401k contributions? Is that number taken from the gross wages on the W-2? That's a great question, Alfonso. Thank you so much for bringing it. So in terms of maximizing contributions, that means different things to different people. So some people, they want to maximize the pre-tax contributions to reduce their taxable income for the year for which they make the contribution. Whereas others, they want to maximize Roth and or mega backdoor Roth contributions. So there are different buckets that you could fill up when you're self-employed, because in the words of the IRS, you're both the employee and the employer. So you can make both employee as well as employer contributions. And then on top of that, if you've got a plan like the one offered by My Solo 401k Financial, you can make mega backdoor Roth contributions. Now let's presume that in this scenario, the individual is under 50 years of age. Let's presume that their business is taxed as an S corporation. And let's presume that they're only interested in making Roth or mega backdoor Roth contributions. So for a business that's taxed as an S corporation, the ability to contribute to the plan is based off of the W-2 wages. So to your question, specifically, you would use box 1 of the W-2, plus any pre-tax elective deferrals, not in box 1, but over in box 12. Well, in this scenario, we're assuming that the individual is only focused on making Roth contributions. So in that case, there wouldn't be any pre-tax elective deferrals. So if box 1 of the W-2 is at least $70,000 and they're under 50 years of age, for 2025, they're going to be able to contribute 100% of those wages, dollar for dollar, up to $23,500 as an employee contribution, which they could make as a Roth contribution, in which case that would go directly into the Roth account. And then they would let their W-2 provider know, because that employee contribution, even though it's not reducing box 1 because it's being made as a Roth contribution, it still needs to be reported over in box 12. So they would let their W-2 provider know that they made a $23,500 Roth employee contribution. Now, if they have a plan like ours that allows for voluntary after-tax contributions, they can make additional contributions of $46,500. So 100% of the wages, dollar for dollar, up to the overall limit, which is $70,000 for 2025, but reduced by other contributions made to the plan. So in this case, less 23,500. So therefore, they can make it the rest up to 70,000 as an after-tax contribution. So that after-tax contribution would need to go into a separate after-tax account. So as part of the onboarding process, for example, we help our customers open up accounts at the bank or brokerage of choice. So they would have at least one account for the Roth contributions and a second account for the voluntary after-tax contributions. So when making a mega backdoor Roth contribution, it's really a two-step process. You first deposit the after-tax contributions into that separate after-tax account, and then move the money over to the Roth account. So at the end of the day, they would have $70,000 in their Roth account. Now, that first step, when you make that after tax contribution, unlike the employee contribution that still needs to be reported on the W 2, reporting voluntary after tax contributions on the W 2 is not required. Per the W 2 instructions, it's optional. So the contribution itself of after tax funds doesn't need to be reported on the W 2, doesn't need to be reported on the personal tax return or the business tax return. But the second step, when you move the money from the after tax account to the Roth Solo 401k, that would need to be reported on a Form 1099-R. And we issue that 1099-R for customers who provide us the information who request it in a timely fashion. We do it for no additional charge. So, in sum, if the goal is to be able to maximize Roth and mega backdoor Roth contributions, $70,000 of W 2 wages, specifically in box one of the W 2, would be the magic number. Hopefully that helps. Thank you so much for bringing the great question, Alfonso. We do appreciate it. Next question is from Brandy. Thank you for bringing the question, Brandy. If we want to convert our Fidelity Solo 401k to your My Solo 401k Financial Solo 401k, so we can take a loan from it, is the entire amount converted, or will we just take out the amount that we want to borrow and have two accounts open? The entire amount is converted. So it's very common that we have customers that have a basic plan somewhere else, for example, at Fidelity, and then they want to upgrade to our plan to be able to take advantage of the service and features of our plan, like the ability to take a solo 401k loan, or the ability to make mega backdoor Roth contributions, or to process in-plan pre-tax to Roth conversions. Or maybe they want to claim $1,500 in solo 401k tax credits. Or perhaps they're looking for the ongoing compliance support, like the 5500 EZ and the 1099-R that we prepare and file for clients who request it in a timely fashion for no additional charge. So there's a lot of reasons that customers might want to upgrade, among others, right? Like the ability to take a loan, alternative investments, etc. So the process is not to set up a second 401k, but really to convert that existing 401k plan to our plan. So to understand that conversion process, I think the key to unlock the understanding is to understand that a 401k plan is a legal entity. So like any legal entity, it's the documents that create it. So if you have a basic vanilla plan at Fidelity, that means that you are using Fidelity's plan documents plus the account is at Fidelity. So Fidelity's plan documents don't allow for loans, don't allow for mega backdoor Roth contributions, etc. So the plan documents can be cut out and replaced with our plan documents. That process is referred to as a restatement. So when we draft the new plan documents, the original effective date will relate back to the original effective date for that pre-existing solo 401k. Now, those accounts that you already have at Fidelity, from Fidelity's perspective, those are governed by their plan documents, which are limited, right? They don't allow for the loan, etc. But Fidelity will also open up accounts for those that bring their own plan documents. So for third-party solo 401k plan documents. So as part of the onboarding process, we help our customers open up accounts at the bank or brokerage of choice, with Fidelity being one of the top options. So we would help you open up new brokerage accounts for the restated plan. We would help you transfer all the cash and assets over. So everything's going to have to be moved over, not just the amount that you want to borrow. Now, once the funds are in the new account that's governed by our solo 401k plan document, now you can take a loan because our plan documents allow it. You would submit an online questionnaire that we ask you to submit to prompt us to prepare the loan documents. And then we prepare those loan documents within 1 business day for no charge, no additional charge. You would transfer the funds out of that new account to fund the loan and then pay back the loan according to the payment schedule. Those loans need to be paid back in monthly or quarterly payments, equal payments of principal and interest. The interest is prime plus 1% or a CD rate plus 2%, with those payments spread over a 5-year term. Great question, Brandy. Thank you for bringing it. Back to Alfonso. From a process perspective, to do the mega backdoor Roth, what happens after the after-tax contribution has been made? What does my solo 401k do, and what do I do as next steps? So the customer would deposit the contribution into the after-tax account, then move the money. For example, if the accounts are at Fidelity or Altruist, it can be moved online electronically. Once the money has been moved from the after-tax account, then the customer or their advisor will go onto our website, mysolo401k.net/forms, submit the form to give us the information that's needed to prepare that 1099-R. Then we would follow up by the end of the following February. We would file the 1099-R with the IRS and provide a courtesy copy to the client and the advisor. So that we just answered that question in terms of the process and next steps. Thank you so much. Let us know if there's any other clarifying questions. So now let's go on to the slides. Thanks for those initial questions. So again, the context here is Altruist Advisors meeting the December 31st deadline, why that's critical. So real quick with some foundational context and content, eligibility, you need to be self-employed with no non-owner, non-spouse, full-time W-2 employees in order to be eligible to set up a solo 401k. Now, for those that are eligible, you can set up a plan all the way up until the end of December. So December 31st, 2025, and that'll lock in your ability to make all types of contributions for 2025 by the business tax return deadline, including any timely filed extension next year. So December 31st is the critical deadline to give the client the most options in terms of contribution types and the most time, right? Because now they can make the contributions, they can open up the accounts by the business tax return deadline, including any timely filed extension. These rules are different for self-employed individuals in comparison to a 401k plan that someone might have at a day job, like one that they might have working in corporate America. For those full-time employer plans, the day job 401k plans, the employees' contributions need to be made by the end of the year. But the rules are different for self-employed individuals. And it makes sense from a policy perspective because your ability to contribute is based off of your earned self-employment income. So a lot of times self-employed individuals may not know exactly how much they made until after the end of the year. They may have a seasonal business where they're working all the way up until the end of the year. Then in January, once the dust settles, they can determine how much they've made, therefore how much they're eligible to contribute, and then how much they want to contribute. So the rules give them time. And this is confirmed by IRS Publication 560. IRS Publication 560 is the landmark guidance for self-employed retirement plans, like solo 401k plans. There's a chart on page 3 that makes crystal clear that as long as the plan is established by the end of the year, the individual can make all types of contributions, employee, employer, even voluntary after tax, by their business tax return deadline, including extension in the following year. So for 2025, establish the plan by the end of the year, open up the accounts, make all types of contributions by your business tax return deadline, including any timely filed extension next year. Now, what does it mean to establish a plan? Well, it's helpful to understand that a 401k plan is a legal entity. It's technically a retirement trust because the assets are held in trust for the benefit of the 401k participant, in this case, the self-employed individual. In other words, it's not an asset of the business. It's not an asset of the person that they can use without restriction. It's held for their benefit when they retire. So like any legal entity, it's the documents that create it. So when we talk about establishing the plan by the end of the year, it's really the documents that create it. You don't need to open up the account. You don't need to make the contributions. You don't need to obtain the EIN number for the solo 401k by the end of the year. You can focus on the paperwork first. So All that needs to be done is to have the plan documents in place by the end of the year to keep all the options open. We make it easy at my solo 401k financial because we create the plan documents within the same business day when someone signs up. We create it in our system of record. So now the client can take their time to determine how much they can contribute, to determine how much they want to contribute, to open up the accounts, to make the contributions, all the way up until their business tax return deadline, including any timely filed extension in 2026. And these accounts can be at Altruist. So Altruist is a platform only for advisors who custody at Altruist. And so we've been fortunate to work with a number of advisors that custody at Altruist, and we can tell you that the process is very streamlined, right? For example, Altruist will often open up the accounts within the same business day, but you don't have to open up the accounts at Altruist by the end of the year. As long as the plan is established, in other words, the client signs up with us here in December, by December 31st, 2025, then they can take their time to open up the accounts, etc. So the role of Altruist is really to provide the platform, to provide the accounts. So they're opening up accounts for clients that are bringing their own solo 401k plan documents. So contrast this with the solo 401k account type at Altruist. And we have a lot of good material out there that goes through step by step how to open up the accounts. But if you go onto Altruist's website, one of the account options is a solo 401k. So that means that this would be a 401k plan document that's provided through Altruist. Whereas if the client wants to have all the features of our plan, like the mega backdoor Roth, the tax credits, the 5500 easy support, the in-plan Roth conversions, the 1099R, the ability to take a loan, et cetera, they can get the documents from my solo 401k financial, but then use those documents to open up accounts at Altruist. So the specific account type that one would use to open up an account for a third party plan is referred to as a retirement trust account type. So as far as meeting the deadline, you could think of it as 3 steps. You submit the online application on our website, which you can find quickly and easily at mysolo401k.net. Just click on open account, then click on get started under solo 401k. That's how we capture the information that's needed to prepare the documents. Once the application is submitted and the payment is made, we prepare the documents within the same business day. That creates the plan documents in our system of record. We do send out an email that same business day to access the documents, but the client doesn't need to return the signed documents to us by the end of the year. They can return the signed documents to us when they're ready to open up the accounts. So once they're ready to open up the accounts, return the signed documents. We'll help get the EIN number so that the accounts at Altruist can be opened up under the name and EIN number of the plan. So meeting that December 31st deadline, again, is going to give the client the most options in terms of 2025 solo 401k contributions and the most time during which they can make those contributions. So they can make all types of contributions, whether employee, employer, or voluntary after tax by their business tax return deadline, including extension, as long as they sign up by the end of the year. So just to dig a little deeper into the steps, step 1 is our online application. Again, mysolo401k.net, click on open account, then get started under solo 401k. It's really just 10 questions, straightforward questions, such as the name of the client, the name of their business, their address. We ask for the name of the plan. Now, if they're working with an advisor, what a lot of clients and their advisors find works well is to include the name and email address of the advisor in that final field along with the name of the plan. So we like to use 2 words in the word trust. It could be a derivative of their business name, or it could be something totally unrelated, like their favorite color and favorite animal. So let's say they call it a blue hippo trust. So after that phrase, after the name of the plan, include, please copy, then the name and email address of the advisor. That will link the application to the advisor. will copy the advisor on communications. So the advisor will receive that email that goes out the same business day, for example, with a link to the documents that are created for the client's business. So once we receive that application, payment is made, then we draft the solo 401k plan documents. So we use our IRS approved plan documents to create a plan specifically for the client's business. So this will include, for example, the adoption agreement, the trust agreement, a copy of the IRS favorable determination letter that the plan is a qualified plan. So in order to be able to reap the tax benefits of contributions, whether it's reducing taxable income if pre-tax contributions are made, or having the potential for tax-free growth, the contributions need to go to a qualified plan. So that favorable determination letter confirms that the plan is a qualified plan. So we draft those documents, an email goes out, same business day. So in that email, there's going to be a download link to download the documents from the secure portal. The cover email is going to specify how to complete and sign the documents. There'll be an upload link to return the completed and signed pages. And then a third link where they tell us where they want to have the new accounts at. And so you could choose, for example, Altruist from the drop-down menu. Once we receive the completed and signed documents, then we will go ahead and get the EIN number specifically for the solo 401k. But again, we don't need to receive the completed and signed documents by the end of the year. They can take their time to return it once they're ready to open up the accounts. But again, the client or the advisor would return the completed and signed pages. Those documents can be signed electronically. For example, if they have electronic signature software on their computer, they could choose Altruist. Then we would get the EIN number specifically for the solo 401k, share that with the client and the advisor. So now, and also those specific video instructions as far as how to open up retirement trust accounts at Altruist. Once the accounts are opened at Altruist, which again, based on experience, they're very fast to open up the accounts, then the accounts can be funded, right? They can be funded by making contributions. They could be funded by rolling over funds from another retirement account. And we're very hands-on, and we have a ton of experience in our knowledge base as far as the process to transfer funds. As you might imagine, the process oftentimes will vary from institution to institution or based on the account type that's being rolled over. So just to go through a couple quick FAQs around the December 31st deadline, just to emphasize, what do I have to do by December 31st? Establish the plan. How do you establish the plan? It's the documents. So we at my solo 401k financial make it very easy to meet the deadline because we create the plan documents. The plan documents are in place within the same business day when someone signs up. So then they can take their time to open up the accounts. So you don't have to open up the bank or brokerage account by the end of the year, as long as you sign up by the end of the year. You don't have to obtain an EIN number for the plan. An EIN number will need to be obtained specifically for the solo 401k, which is different and distinct from the EIN number that they might have for their business, but that is part of the account opening process. So they can take their time, and we will obtain that as part of our service. Is the tax return deadline my personal tax return deadline, April 15th, or my self-employed business tax return deadline? Well, it's really the self-employed business tax return deadline. So if the business, for example, is taxed as an S corp, the tax return deadline is March 16th because the 15th falls on a Sunday, or September 15th if they file a timely extension for their 1120S. But let's presume that the self-employed business is taxed as a sole proprietorship. In that case, really their 1040 is their business tax return deadline because they report that income, as a disregarded entity, it flows to their 1040. In that case, the tax return deadline would be April 15th or October 15th if they file a timely extension for their 1040. If I adopt the plan in December 2025, how can I make contributions based on income that I earned in January 2025? Well, we draft the plan as an industry best practice as effective as of January 1st, 2025, which means that the individual is going to be being able to make contributions for any self-employment income earned and reported for 2025. My CPA tax advisor is informing me that employee contributions must be made by December 31st. Are you sure that I can make this contribution in 2026? Yes, we are. And that goes back to the conversation earlier, how the rules are different for self-employed individuals. That CPA, that tax advisor, might be thinking of the rules that apply to a full-time employer plan, like one that someone might have at a job where they would have to make the employee contributions by the end of the year. But for a self-employed individual, as long as you establish the plan, meaning the documents by the end of the year, you can take your time to make all types of contributions, including employee, employer, and or voluntary after tax by the business tax return deadline, including extension in 2026. Okay, wonderful. We do want to go back to the questions that were chatted up as we were going through the slides. We want to take a quick moment to ask you to please like this video. Liking will tell the platform, whether you're on LinkedIn or X or Instagram or YouTube, it'll tell those platforms that the content is valuable. So it'll help other solopreneurs, other advisors like you find it. So please take a moment to like. Also, if you'd like to subscribe, we invite you to subscribe as we do go live every day. So then you get notifications of all of our crucial content that we deliver every day to help you secure your retirement. We also want to invite you to our community. We have the largest community of solopreneurs, solo 401k owners, other advisors around these topics. It's totally free to join. All are welcome. You don't need to be a client. With over 30,000 members, we have vibrant forums. We have a library of videos and webinars. So that means there's a ton of ways to learn, a ton of ways to share the knowledge. You can join quickly and easily at my solo401k.net/my community. So please don't hesitate to do so. Can we get a link to the right forums? Yes, if you go to my solo, we're back to the mega backdoor Roth. Good discussion around that from Alfonso. If you go to mysolo401k.net/forums, you can see links to all the forums. If you then drill down, if we're talking about after tax to Roth solo 401k as opposed to after tax to Roth IRA, then it's going to be this form. Hopefully that helps. Thanks so much for the good participation, Alfonso. Okay, next question is from Prakash. Thank you so much for bringing the question. So no, we don't fund advisor fees. Now, keep in mind, we don't charge any advisor fees. I mean, we're not an advisor. We are a plan provider. We're not giving any investment advice. We don't hold the money. We don't charge any type of AUM or percentage of the balance fee. But so essentially, that's between the client and the advisor. Hello, thank you for joining. How do I transfer property from solo 401k to Roth 401k? Property, by property, I mean real estate. Okay, thanks so much for the good question. So if you have a plan provided by my solo 401k financial, our plan does allow for investing in real estate. So it is possible to process an in-kind, in-plan, pre-tax to Roth conversion. So that means that the individual would transfer, say, real estate that they acquired using pre-tax solo 401k funds to a Roth status. So in that case, that would be taxable. So they would need a determination of the value because that value will need to be added to their income for the year of the conversion. Just like a pre-tax to Roth cash conversion, you need to add that converted amount to your income for the year of the transfer of the conversion. An in-kind, in-plan, pre-tax Roth conversion, you would have to add the value of the asset, in this case, real estate. And so you would need third-party documentation of that to keep in the plan records. The client would need to submit a form on our website to give us the information we need to prepare the 1099-R, and then they would share that 1099-R with their tax advisors that could, again, report it as taxable income for the year of the transfer. Now, the title to the property would remain the same. In other words, the conversion wouldn't be tracked at the title level. So when someone invests their solo 401k funds in real estate, the title is held in the name of the solo 401k, and it would continue to be held in the name of the solo 401k. you wouldn't have to update it to show that it was now held with Roth money. As far as the flow of the funds, so the income and expenses related to that investment would now need to flow in and out of the Roth solo 401k sub account as opposed to the pre-tax account. Hopefully that helps. Well, thank you so much for the good participation. Again, we invite you to please like the video, please subscribe. It helps us to get the word out. It looks like that's it for today's solo 401k session. Thank you so much for investing your time with us. Your time is valuable and your retirement future is worth it. If you haven't yet, please like and subscribe so we can keep building this solo 401k community. We'll be back here tomorrow with more crucial content to help you secure your retirement. Quick question here at the wire: would a real estate agent be enough for the valuation? You would, because it's a taxable event, you would definitely want to have, it would be prudent to have multiple sources of documentation. But yes, that could certainly be part of it, to have the real estate agent prepare comps in the area. But it would be prudent to have multiple sources since it is a taxable event. For example, multiple real estate agents that provide comps in the area. All right, great. Thank you so much, everyone. Until next time.